Hey guys, Mike here. So, oh boy, what another nice red day today, and we bled out all day long. And there's a few reasons for this. We'll get into a whole bunch of stuff that's going on in the market. Some things you might actually see happen here soon, which could be good or bad. But one thing's for clear is the market. It's kind of spooked because what's happening now is you got President Trump. He is going full throttle in on Jerome Powell and the Fed, right? I mean, he is hammering on. Oh my goodness, all over social media all weekend. Today, wants him gone. And again, there's a court case that may make that happen, may not. We'll have to see what the judges decide on that. But, what can happen is, remember, a lot of people look at our Fed, because it's big, obviously, on that big old balance sheet. And it's not just about Jerome Powell, guys. It's about all of them, because they voted 12-0 not to lower rates. And what I'm thinking about is we were having this discussion in our Discord. Like, put in the comments, like, do you think the Fed should lower rates or keep them the same, and why? Why is the key? Like, I want to see if you have a real reason behind it and stuff. But the big thing is, I'm telling you, I don't care if somebody's on your team or not. It don't matter who it is. I don't care if the president's Abraham Lincoln, George Washington, or whoever it is. Don't matter. Like, you do not want any president to be able to just at will fire the person in charge of the Fed. You do not want that just because they didn't make a decision they like. Okay, the Fed, what has Jerome Powell done? Again, you know how I feel about Jerome Powell. I've gave my opinion many times. I'm sure he's a great person and everything, but what does he always do when he's asked about any political stuff? I don't answer that. They try their best to stay neutral on it. I don't answer that. And the reason why, one thing President Trump's right about, they are always late. We all say it, right? We know they're always late. Why are they always late? Because of the way they collect data. I actually don't have a problem with the people at the Fed. It's the way they run it. It's the way they do it. We're in the, it's 2025 and we're still calling people, asking them how much they can rent their houses for and doing these surveys when there's companies out there you can literally do a contract with that can send you the most updated data that will be light years ahead of the data they're actually getting. You know what I'm saying? But they don't do that. And so maybe they do that way on purpose. I don't know what they're doing. You think we'd be much better off. But, and as far as them cutting rates and people go, oh, they're holding up the 10-year. Well, guess what? You might want to go back and look at your chart if you already forgot. They cut. They cut a couple times. What did the 10-year do, guys? It went up. It went the opposite way. Right? So just because they cut, don't mean the 10-year is coming down with it. And don't say you think it's coming down either, because you don't know. Like, look what the yields are doing right now. Look at the 30-year, for crying out loud. Look at the market and the fact that, I covered in the Saturday video, what happened today? The index is down, Treasury's down, oil down, and the dollar down. That is a rare thing, folks. I showed it in Saturday's video. Happening again. Okay. The only thing really up, yields. I think even crypto might have been green. That was interesting. So, that's the thing. So, and there's something missing in this market. I was telling members in the video about this. There's something missing, behind the scenes that we're so used to having happen, right, from overseas. Okay. That's not happening right now. And it's helping to keep us pressed down, help keep this market down. And while you're not seeing those rallies we're so used to, okay, to come off of that. So we'll get into a bunch of that stuff. One thing, it's not going to help things, and I don't laugh because I'm happy it's happened to people. I'm just literally trying going, oof. Like, if you need another thing that's not good, is come next month, if you are late on your student loans, you are getting reported, buddy. And it's going to be 5.3 million borrowers who are in default. And so your credit scores are about to get smacked. Because there's three things you don't be late on: your house, your car, and a student loan debt. So their credit scores are fixing to get smashed. Now, earnings. Obviously, this is what a lot of what the market's waiting on. You can see there's the big one, but next week, that May 1st week, oh my goodness, boatload of earnings happening then, okay? And we got to figure out what the guidance is going to be, right? I mean, who was it, Delta United gave two different guidance. They were like, oh, if a recession happens, it's this. And if a recession don't happen, this is the guy. Really? Like, come on, you might as well just not give guidance. And so we got to figure out who's going to pull guidance and just not guide at all. Okay, that's going to be interesting for the market to go, oh, okay, you're not giving guidance. And then who's going to be the smart butts that want to go out there and give two different guidances? Okay, so that's what we're going to have to figure out, and then we'll see. Can't wait to hear from Tesla tomorrow, right? We're going to go over the chart, but Tesla reports tomorrow. It got whacked today. When you look over here at the S&P, I think I either said in Sunday's video or sometime last week, if we lose that anchor VWAP from the low of this crash, watch out. And so we got to watch out today, but we came down, took out this low, came down to this 1 hour fair value you got right here, got our bounce, okay? So that's where we bounced. Now, if we do move up, obviously now what do you have? You have a daily fair value gap above, got that anchor VWAP, which now will be resistance, Okay. So if it does sit there and get rejected right here, then watch for what you're going to call the Trump news candle below, because that right there is the biggest news candle I've ever seen. That's where he paused for 90 days, and we got a 10% rally in the S&P. I think it was 12% on the Qs. And I'm pulling that from a 1 minute candle, because that's actually, I mean, it was a gigantic, I forgot what the percentage was in the 1 minute candle. But with news candles, we normally take the top wick, the bottom wick, or we already took the top wick. We didn't take the bottom wick, so we can revisit down there. So I'm just telling you, if you see selling pressure continue, or we do get a rejection and there's no tweets to save the day, then that's most likely going to be our next target where we're heading down. It's not even that far down, to be honest with you. If we do get above the anchor VWAP, then we'll fill the gap, head towards JPM collar. What's causing major issues is this VIX is just not giving up. It is holding that March high right there, as you can see, and the VIX can stay above 30 for a long time, okay? What else we having problems with? Where's money going? Gold. Look at this. That looks like some kind of crypto chart or something right there, but that is gold, folks. And every once in a while, you can see it on the chart, this is GLD, it'll get that run. And when you look over this chart, you can see traders plowed $18 billion into Havens Fund in April. So gold, cash-like, and low-volume ETFs saw the biggest inflow since 2023. But I think we all know that, right? It just keeps going up every other day, and everybody still, keeps expecting a sell-off to happen. That could come soon, because you see this stat right here. So gold is way above its 200-day moving average, over 25% now. And when it's got that in the past, you can see it's not many times throughout history here. See all the red? 1 day, 2 day, 3 day, 4 day, week later, month later, not a whole lot of green. Maybe the difference is this time, though, of course, and the reason why it keeps going, because you got a lot of central banks loading up on gold. Okay, is that going to stop? We don't know, but it's well overdue for at least a pause. I mean, I think we can all agree with that. And if that happens, where does the money go? If people start taking profits on gold, where does the money go? The other thing you're seeing here is, again, I'm going to keep showing this to you why it's happening, but you're seeing defensive, right? Dollar General came up, rejected off that trend line, bounced off this trend line, boom, more money flowing in. It was green today. Albertsons was green today. Those other grocery stores green today. Consumer staples, things like that you're seeing that are happening. You saw Netflix. We talked about people talking about how that's a defensive, play and everything. That was green today, so it held up as well. And you can kind of see this formation here. Maybe it's going to be a cup and handle. Maybe it already is a cup and handle. So again, you're seeing that happen. You go over here to something you hadn't seen, I don't know if ever, honestly, where it's the DXY and the 10-year yields diverging. And it's like, oh boy. So it's rare to see the 10-year plus 40 BPS and the DXY down minus 3%. Like I said, seeing the dollar down, oil down, treasuries down, stocks down, it's just a very rare thing. The other thing holding everything up, CTAs, once again, what are they doing? They're more or less going into commodities, gold, more safe haven type stuff they feel, versus, they're still short the indexes, right? And so that's still creating a problem. They're trend followers, and they're following the trends, and the trend is not up in the stock market right now, so they're just following the trends and keep pushing. Now, if commodity prices do continue to go up and we see a slowdown, what is that? Stagflation. That's the big thing they're talking about right now. Now, speaking of yields, you can see right here that shaded box, that little box right there seems to be the new support right now, as you can see. Over the last month, where it keeps coming down, hitting it, and then it keeps bouncing from there. So got to break through that and start bringing these down. Again, that was the whole point of the administration. They were trying to get the 10-year and all the yields down so they could refinance this crazy amount of debt we have right here. But that is just not happening. The 30-year is just off the, look at that right there, off the chain right now. Still almost at 5% once again, which is why you see we had no problem selling those bonds, because people are like, wow, I can lock that in? Are you kidding me? I'm basically as risk-free as it gets. That's awesome. We'll take it, and we'll see if this trend line is going to continue to be resistance. So maybe it starts to form a flag right there, and I'm sure nobody would be upset if the yields started to come down. That means treasuries would actually go up. And that's what I'm saying, that 60-40 portfolio is a disaster right now. Now, when it comes to Tesla, obviously I put those two shaded boxes in here thinking we were going to hit one of them during earnings. Well, we came down today into the penny, filled that gap, fair value gap, and bounced, okay? Obviously, earnings is tomorrow. And Tesla is way down going into earnings. So it's interesting they've ran this thing down going into earnings, which we all know the car numbers should be absolutely horrific, okay? Unless something is fudged, those should be horrific. The question is there going to be some announcement like Elon, coming back to Tesla and leaving Doge? Or how is the market going to react to the robots and, the autonomous taxis? Are they going to be rolled out on time? Because that's what got this thing going last time. And so it had nothing to do with car sales, because those should be horrendous. If it's not good, we're coming down around 179, 185, somewhere in that area most likely. If for whatever reason the market just gets all crazy and it's like, oh my God, robots and autonomous taxis, woohoo! Then the other shaded box above, which we marked out, that's where we should be heading. Should fill that gap and then maybe break through that trend line. So, with Tesla, I've always said people try to predict this one. Good luck trying to do that, okay? Good luck trying to do that because, again, them selling it down into earnings is actually a good thing if you're a Tesla shareholder, believe it or not. Now, NVIDIA came down, tested this trend line here once again. It's been in this channel. It only fell out of it one time. That's when we went on the real crash down. But you can see, hits it again, gets a bounce, trying to hold it, still below 100 again. So this one, it's just a mess. It has all kinds of stuff going against it right now with, obviously, U.S. trying to keep them from shipping stuff into China. China's also saying, hey, don't worry, we got this. So they're rolling out their own chips. And so NVIDIA's kind of stuck between a rock and a hard place right now. If it's going to get a bounce, obviously you think this is the time because it's got plenty of gaps to fill up there. It doesn't report earnings for quite a while, if I'm not mistaken. I really don't know of any news that could really just catalyze this thing going up. Unlike Tesla, if they start talking about robots and everything, let me know in the bottom if you can think of some. But I know people that are buying here, people are looking that, if it continues to break down, 80, 85 is definitely going to be one they're looking at right there. And then we go over to some popular retail stocks. You see HIMS actually holding up better than I would expect it to, right? That line we put in there for real support, we waited on for months where it bounced at. Still holding right there. If it does get above it, that 32, 35 area is going to be super heavy resistance, I believe. If it does ever want to break out of this channel right now, it's just in this descending channel, just still grinding down. If we break 2584, that's going to be real ugly. There's no doubt about it. Palantir right here is holding up better than ever. It's another one of these people say they're defense plays, like literally, because they're getting contracts. And you can see it's held up so freaking well. It's held up way better than even the Magnificent Seven. But for now, it's holding up really well. And look at Disney. Oh my God, this thing right here is in the area once again. It bounced in this area, and now it's coming right back down to this area that it needs to hold. And you would think if there's one travel area that's got to be doing bad, it's Disney. All right, because they get a lot of foreign folks coming over to Disney. And you see this trend line goes back to 1974, and it's sitting below that trend line now. So if it does get a bounce, start to come back up, that should be heavy resistance if it does decide to come back up. But I can't wait to hear their earnings because they'll definitely be able to tell us like what the trend is looking like. So a lot of people from Japan and other countries in Europe really come to Florida to actually visit there and everything. And so I believe, look at earnings here, it's going to be on May 7th. So it's not that far away. A couple weeks out. So definitely look at this one right here. Also, if you look at Lulu, for example, remember they get a lot of their stuff from overseas. I think a lot of from China, if I'm not mistaken. There's another one, nice bounce up, but it's basically giving us all that back. It's at that level right there. We've had multiple bounces. If that breaks to 23.50 is what you're looking at on this one. But yeah, that's definitely what you call a topping process right there. If you look at Lululemon's chart right there. Now, when it comes to earnings, a lot going on tomorrow. So you have Verizon, GE Aerospace, you got your defense contractors right there, as you can see. Then the big boy Tesla is going to report. We'll see if it can get like any worse from them. And then you got Enphase as well, Capital One. That's a commercial bank, so you definitely want to hear about them, see what they see in the consumer and everything. No hardcore data to worry about. All you have is the Richmond Manufacturing Index at 10 after the open, and that is really it for that. And so buckle up for another fun one, because it will definitely be another volatile day. There's no doubt about that. Please hit the like and subscribe button on your way out. Think about signing up for the membership, less than McDonald's combo, and I'll see you guys tomorrow.